There's one stock that is about to explode in a good way. It is not Tesla. We can talk about Tesla after the earnings reaction materializes. Tesla earnings are out as of the recording of this video. Earnings per share was a slight miss. Revenue beat. So you have to look elsewhere, and in my opinion, the best stock to look at is Macy's right now, which had an excellent Q2 earnings and is up significantly from that date. Doesn't have Q3 earnings for another month into mid-November, so it's an opportunity where you can get into a retail stock that has $20 billion of net sales, even while other retail outlets are floundering, and also showing explosive relative strength today compared to the market. So in the next couple of days and over the weekend into mid-October, late October really, November, depending on when you see this, Macy's is the stock to buy, in my opinion. I'll tell you about this 1,000 dollar guarantee we have going on at the end of this video. Stick around. Let's go.
This is Sam Putnam.
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 So this is a little information about Macy's Q2 earnings. There's that net sales. There's that raise on guidance, which always helps the share price for the most part. And then that earnings per share beat as well. So that's the move. This tells us everything we need to know about the earnings. I guess we didn't really have to ask ChatGPT, but it's good to have both the chart and the info, and it looks awesome. Now, why am I talking about Macy's? It seems like an unserious company to be looking at. Shouldn't I be talking about NVIDIA? Well, NVIDIA is holding this 50-day moving average along with, its peers are shaping up. Meta is holding in there. An even closer one to worry about is Palantir, which had a rough day today like the rest of the market, which was down significantly, not down close to this tariff rare earth scare last Friday with the whole Trump-China conflict. But if we look at Macy's today, it's green. So it has relative strength to the market. Sure, it's sold off a little, and then it's sold off on that tariff day as well, but it bounced off this moving average, which is something that actually happens. Stocks do bounce off the moving averages. Funds, individuals look at those averages, and it's a self-fulfilling prophecy. Now it's up over this level, and there's a buy level over about $18 or 18 and change that's super interesting, where you can risk 50 cents and make $1 to $3 to $5 to more. If we really zoom out, we can see that this thing just channels upwards. And if we look on a 5-year chart, we can see that it's been a while since Macy's has been interesting. They, like every company, went up in the COVID bubble, went down at the beginning of 2022, mid-2021 really, and it's been a while. That's basically back in early 2024, they were up in the $20 level, and they've got a lot of blue skies just getting over that 200-day moving average right here, which combined with that earnings, those two factors, it's unsurprising they led to that big skyrocket in price. Hindsight's 2020, but I'm giving you a new idea right here over this left side peak in late 2024. Super interesting relative strength. So that's technical overload there. If you want to look at what's going on with the company, I don't blame you. Unfortunately, I'm not a shopper, right? I mean, you probably aren't either. I know most of the viewers are men who watch this. They reported strong sales in basically women's career clothing. Is that surprising, given women are basically owning men in terms of their career, in terms of shopping expenditure too. They've always owned men in that department, but now it's combining to this perfect storm where companies like Macy's that makes that clothing really does well. So they also sell men's tailored clothing, and saw some solid sales there as well. But no matter what it is, it's hard to say exactly what it is. I looked at the site as well. The site loads very quickly. It's a professional site. It's no Amazon, but really none of these standalone e-commerce sites are Amazon, right? I mean, it's impossible to be as streamlined and efficient and social proof, well reviewed as Amazon is. So it's a vote of confidence for the company that women's sales uptick is, sensical and also a boost. And if they really are able to do final mile delivery, that makes them a rival against Amazon as well. So I don't think it's just the online stuff, though. I think there's some store closures probably helped. They're closing 150 underperforming stores by next year. So it's makes sense why this company's been beaten down. I'm not telling you to buy and hold this company for a year. I'm not telling you to do anything. But I think as an idea, it's a very strong idea for a move up into the 20s with very low risk. And it's definitely strong after these earnings. This is a very challenging time to just jump into stocks. Netflix selling off a lot on earnings, and Netflix is generally the consumer sentiment barometer. As it was for its previous earnings as well. Of course, this earnings was awesome for Netflix, and a lot of companies had awesome Q1 earnings, which coincided with that April tariff rebound when Trump reversed his stance there. And there was capitulation, the hedge funds, money people got mad at him for ruining the market. Whatever it was, it combined for a perfect storm for Q1 earnings to go well. You see that with Intuitive Surgical as well. Now, this one didn't hold that, but this is another example of a recent Q3 earnings that was strong, selling off a little today. Again, that being super notable, Macy's relative strength to the market today, which was down. It looks like a little bit only because of how significant this candle last Friday was, but this is actually a lot to go from 670s all the way down at one point to 660s. It's like a couple percent, depending on how you measure exactly. That's at least over 1%. So that's a lot, considering this is the entire market, right? If you want your whole portfolio to go down on just one day, 1% starts to sound like a lot. So that's the play, and that's some of the reason why we're looking at Macy's. They did reduce long-term debt by over 300 million, and they also are a dividend stock. So 50 million paid out to shareholders. They are repurchasing $50 million worth of shares, and they have a huge authorization. Oftentimes with smaller companies, these authorizations are not even close to being met. I don't think Macy's is necessarily going to meet its cap, but it's certainly notable to see they actually have bought back that many shares. So we'll see what actually happens with some of these partnerships. This is sort of an e-commerce 3PL company, so it's a positive sign that they are getting with the times and working with startups. We'll see if there's any acquisitions or collaborations in the future with these sort of forward-looking companies. But if we just take a look at its competitors, right? Who do we think of when we think of Macy's? Well, broadly, Target sort of turning up, hasn't done well. No surprise here. These retail companies. Walmart is the exception. And they also a good example of them being the exception was this OpenAI deal, which led to this little bump here. Walmart has had a Walmart Labs division as well that has sort of moved them into the 21st century, even as some of these other companies, TJX, doing well, but not really offering an opportunity to get into. So I wouldn't know how exactly to buy this. It also moves 2% a day, even though, it might sort of look constructive here. It's just barely moving. So at least Macy's has some strength here. It's still a boomer stock in terms of movement, but in terms of chart setup, it's not like IBM is useful as a buying opportunity in terms of, formerly blue chip stocks. And of course, I wouldn't in a million years say to buy something like Ford, which has been going sideways basically for almost a full year, 18 months. So that could change with earnings. GM recently had solid earnings. GM is super interesting here as a buy opportunity, legitimately. But as far as companies that are not going to have earnings for a while, Macy's is definitely the one that looks most interesting right at this time and is low risk. I know it's not NVIDIA. I know it's not some quantum company, but I am sharing this idea for a reason. This has solid relative strength. If you like these ideas, hit that like button. If you haven't subscribed yet, hit that subscribe. It helps more people see the channel, helps put out more ideas. And if you want to take your stocks to the next level, take a look at our make $1,000 in stocks in 90 days or your money back guarantee at stockscommunity.com. That is a legitimate guarantee, and I can guarantee that because the price of the membership after that $25 non-refundable fee to keep the bots out is $250 a month. So if I can't help you make 1% a month, well, I can't help you at all. This is not financial advice, but take a look at that if you want to see some growth. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.